We've got some big earnings this week, including NVIDIA. But before we get to that, we've got Walmart today. Year to date, Walmart up 65%, outperforming just about every investment. And over the past 6 months, it has been soaring. After the company announced their Q3 earnings, shares are up even higher, 52-week high. In fact, revenue came in at about $169.6 billion. That was 5.5% growth year over year. The company also gave us confidence guidance. I think this should lead to some bullish sentiment for Amazon, particularly maybe Target. We heard from Lowe's. Everything looking actually pretty good. When you look out into the next several quarters for Walmart, 3, 4, 5% growth. When you're doing $170 billion in revenue per quarter, 3, 4, 5% revenue growth, certainly good enough. Now, some impressive things from the cost control side. The company actually increased their operating income by about 8% year over year, despite just 5.5% year over year revenue growth. Their gross profit also expanding just fractionally. But again, when you have these massive revenue numbers, just fractional can lead to big results. We had that revenue number, like we said, come in at 169 and some change. That was 5.5% growth year over year. Company grew its operating income, like we said, 8.2% from $6.2 billion all the way up to $6.7 billion. Company saw its debt financing costs down 13% year over year, probably driven in part maybe a little bit by a drop in interest rate, but more importantly, the company did pay off debt over the past year. So you saw a drop there, leading to a net income number of about $4.6 billion. Now, it's up big time over last year, primarily because the company had kind of a one-time loss that they had to realize, about $4.75 billion. Otherwise, it actually would have been a slight drop on that net income number. Now, from a balance sheet perspective, Walmart, as you could expect, sitting on a decent amount of cash, although not a large pile like we see maybe potentially over at Amazon, but the company is controlling its long and short-term debt. They've got about $3.2 billion worth of debt coming due over the next year, and you see on the long-term debt side, we've whittled that down from $36 billion down to about $33 billion. On the inventory side, what I've noticed, the company's sitting in a very nice position inventory-wise, given the strength that they talked about from the sales position that they'll have heading into this upcoming quarter. Last year, they had about $64 billion worth of inventory. This year, just slightly underneath that. So things are looking really good there. Now, from a cash flow perspective, things, as you can expect, looking very good over at Walmart. $14.7 billion worth of net income. All our add backs gives us net cash provided by those operating activities about $23 billion. Last year, it was about $19 billion. The company continues to invest on its property, its locations, about $16.7 billion over the past 9 months. So that chews up a lot of this operating cash flow. So where does the rest go? Well, you get dividends over in this one, $5 billion worth of dividend. They also repurchased about $3 billion worth of stock, and they paid back about $2.8 billion worth of debt. All in all, the CFO over at Walmart probably deserves a little bit of a raise, because look how tight of a ship he's running from a cash flow from operations standpoint. Just a $233 million build in cash. So they've done a very nice job generating operating cash flow, investing it back into the locations, continuing to pay dividends, pay down the debt a little bit, also buy back the shares, leaving you basically cash flow neutral. Now, on a dividend yield perspective, you're not getting big yield over here, just south of 1%. But obviously, if these interest rates continue to walk back, 1% will look better and better as the days go on. Now, what's not looking great is this stock from a technical perspective. Yes, we are on an absolute breakneck pace on this one, but we are at the top of a very, very long-term channel line. In fact, a near 10-year channel line. You're waiting for pullbacks in Walmart. Your first opportunity is usually around the middle of these channels, although you'll probably have a back test to the top of the channel, further back, probably into the $75 range. First area where I would entertain shares of Walmart. If you've held a Walmart shares in a retirement portfolio or any type of portfolio, pat yourself on the back. You've had a decent performance, more than decent performance on this one. And it looks like with the guidance that the stock will at least hold the levels, at least in the shorter term. Hopefully you enjoyed today's video. Obviously, we've got more earnings later this week. Be sure to subscribe, like, and comment on the video if you can. Good luck with your investments.